Hello, everyone. I'm pretty sure you know me as the MC guy that comes in between speeches, but I'm also ironically a speaker. So my topic is on central bank digital currencies. So before I start, I'll just give you a quick story. Back in sixth grade, I was the quote-unquote Discord kid. I watched memes off YouTube. The only messages I sent in Discord were meme GIFs and images. And back in my sixth grade self, something fascinating appeared, something mind-breaking, something so renovating. A thing called Dogecoin. If you don't know Doge, it's a meme with the Shiba Inu dog having a side eye looking at somewhere. And as a sixth grade self, that was so fascinating that I decided to invest $50 into Dogecoin, which at the time, of course, I got permission from my parents, but at the time, $50 was my entire life saving. You see, I did chores, I saved up my pocket money, and with that hard-earned $50, after investing in it, let's just say the results were, I learned that memes were not the best financial advisors. But today, I'm not here to talk about my personal self. I'm not here to talk about normal cryptocurrencies either. I'm here to talk about something that's going to sound a bit boring, but it has the potential to blow up our entire economic future: central bank digital currencies, otherwise called CBDCs. Now, I know you're thinking that the previous speaker came up and talked about nuclear fusion, nuclear fission, whatever that is, and it was really boring. I'm sorry, Sean. And this guy is coming up and talking about finance and giving a lesson on cryptocurrency. But I promise y'all, it will be fun, it will be entertaining, because today, as the theme of this event says, we are on the edge of possibility. And for my speech specifically, we are on the edge of possibly breaking up with our bank accounts and going bankrupt. Now let's rewind a bit. In 2009, an anonymous individual at the time called Satoshi Nakamoto created Bitcoin. And in 2009, one Bitcoin was worth basically nothing, about 20 cents. And fast forward to late 2024 in December, it hit over $100,000 per single coin. And yeah, there were some up and downs in between the decades, but I would say for a few pieces of code, that's slightly impressive. And to put that into perspective, there was a software developer called Laszlo Hanyecz. And you might have heard this story before, but he paid for 2 Papa John's pepperoni pizzas with 10,000 Bitcoins back in 2010. And at the time, that was worth $41. But when we convert that to current Bitcoin money, he had a $1.1 billion pepperoni pizza. Which, me, personally, I think it's worth it for a good slice of pepperoni, but that's just how much Bitcoin prices have rose in the past decade. But crypto hasn't exactly been all unicorns and pepperoni pizzas and all this positive, happy sunshine. In 2022 alone, there was a $1.8 trillion of money in a crypto crash. Trillion. That's not just, oops, I dropped a $20 bill on the way home. It's, oops, I accidentally erased the entire GDP of Canada. And scams, $3.8 billion of crypto assets lost through scams and thefts in 2022 alone in a single year. So clearly, crypto had its moment. It had its peak, it had its brightness. But if we're being real and we're reflecting upon it now, it never really developed our financial system. It never really helped advance our financial system either. It just created a far weirder one and a ton of headaches for people all over the world. Now, the main reason that this innate cryptocurrencies, conventional cryptocurrencies can't work is because these forms of digital currencies are all decentralized, meaning they're private markets with little to no government intervention at all. This is where CBDCs come into play. Now, imagine your own government, the South Korean government, the United States government, they made its own version of crypto. But instead of market chaos, it's backed by your country's own central bank. And that's basically what a CBDC is. That's the end result of, let's say, a dollar bill or fiat money made love with the blockchain and had a mini baby. Now, I know that for you all, it might sound a bit suspicious. Obviously, when there are far too many very questionable politicians that I think we can all agree we can't trust them with their own hard-earned money, it might not seem like the best idea possible. And as of this year, it is still being a rapidly developing new form of technology. In 2025, there are over 130 countries representing over 98% of the entire global economy exploring CBDCs. And that's just not some nerdy experiment anymore. That's a whole new era of finance. It's a whole new era of economics. And countries like China and Nigeria and Jamaica have already launched their first digital cryptocurrencies. And countries like the United States and countries in the European Union are also considering we should get into this too, we should join the competition. So the question is, are CBDCs the digital upgrade we need, or are we about to accidentally delete our whole global economy? Let's look at the good news first. Unlike Bitcoin or Ethereum, CBDCs are quote-unquote centralized. This means that there's regulation, there's oversight, and there's fewer chances of your grandma getting scammed by a guy named Crypto King on Reddit. And the United States FBI says that 71% of all investment scam losses were tied to crypto. And every year, the amount of those thefts are increasing by 53%. CBDCs change all of that completely. They're traceable, transparent. Basically, if regular crypto is like a shady alleyway, CBDCs are a shopping mall full of surveillance cameras. Let's look at an example. Take Jamaica. They implemented their CBDC in 2022, and this graph here is Jamaica's Basel AML Index score, a ranking system that evaluates countries based on their liability of online money laundering and finance terrorism by the Basel Institute. As you can see, their index score, or their liability to finance crimes, decreased from 2022 to 2024 after the implementation of CBDC compared to the increase of finance crimes the 5 years before CBDC implementation. And a country like Jamaica isn't objectively the most economically advanced, nor does it have the most transparent government system. And yet, if a country like Jamaica is able to clean up their crypto space and solve the previous issues of decentralized cryptocurrency, imagine what first-world nations, hegemonic economies like China and the United States could do with the proper CBDC implementation. Now let's talk about financial inclusion. That's another benefit that follows naturally due to an implementation of CBDC. As of right now, it might be a bit surprising, but over 2 billion people in the world, they still don't have a bank account. And globally, low-income folks have insane barriers to opening accounts and repaying debt. So from the perspective of private commercial banks, obviously, they're not exactly excited to serve people who can't pay back their loans. If you loan $20 to your friend and they never pay it back, you're never going to loan your friend money ever again. CBDCs, they're a bit different. They're public, governments, contrarily to corporations, are not profit-driven. They have an obligation to foster economic inclusion and care for the lower-class citizens. If governments run them correctly, they can reach people that banks ignore. In fact, the Bank of International Settlements in 2022 had a report. Out of all nations that currently are developing a CBDC program, financial inclusion, shown by the red, turned out to be one of the greatest factors for issuing such a program. Now, before we all start praising CBDCs and think that we are now saved from our poor economic decisions, let's take a step back. Because there are very serious flags that comes along with this new digital trend of CBDCs. First of all, nobody really wants CBDCs. A 2023 National Cato Institute poll said that 76% of Americans oppose a central bank digital currency due to the lack of trust in the government. And that 76% is a higher number than people who oppose pineapple on pizza, and there are a lot of haters for pineapple on pizza. Now, in Nigeria, they also implemented a CBDC themselves called e-Naira. And out of all of their active bank accounts in that nation, only 0.8% of the citizens opened up a digital wallet. And within that very tiny number, 98% of all of those wallets were completely inactive. That's like getting a gym membership on New Year's resolution and never working out after 2 workout sessions. It's a complete waste of national assets, and sometimes, yes, CBDCs can fail, and they do lack feasibility. So, without trust, no one's going to use CBDCs, right? There are so many questionable politicians, we're not going to trust them with their hard-earned money. And without users, the system collapses on its own, under its own hype. Let's talk about the elephant in the vault, commercial banks, originally existing companies or corporations involved in finance banking. CBDCs might replace all of these private bank deposits. A study from the Harvard International Review says that for every $1 of CBDC involved, banks might lose 80 cents in deposits. And that's terrifying if you're a student in finance, hoping to be a banker, or someone that just likes lollipops that they give you for free when you go to a bank. And if people start moving their money to government-run CBDCs, banks won't have enough funds to lend out. That means there are fewer business loans, fewer house purchases, and a 5% drop in industrial lending completely. And that's not small at all, when considering that the global entire commercial banking industry makes about $2.3 trillion in a single year. If CBDCs knock off that balance, we're not talking about simple disruption in our finance system. That's a whole detonation and blowing up our entire finance system. So you might be wondering by now, why? Why am I giving this speech? Why is this so important? Ultimately, there needs to be a choice made. Whether or not we are going to implement a CBDC program or not. It's like we're at a poker table, and on the pot, we have our entire global finance system at stake. On one path, we might get inclusive, secure, and regulated digital money that helps people of all income ranges. On the other path, if we lose the bet, we might accidentally obliterate our entire economy and get stuck with the PayPal method that no one really uses. Ultimately, CBDCs aren't good or bad. You can't answer the question, are CBDCs beneficial or harmful? They're simply a tool, and the right question to ask is, how do we use them responsibly? Do we build systems that include the unbanked while still protecting innovation? Do we regulate crypto without crushing the private sector? Do we actually ask the public what kind of future money they want? With all of these questions, there are so many factors that go into CBDCs. It's a tool that depends on how we use it. Because money, regardless of whether it's fiat money or cryptocurrency, it isn't just digits on a screen or a piece of paper. It's a form of trust and a symbol of relationship between the citizen and the state. And without that trust, even the most high-tech coin is simply just codes, simply just numbers on a screen at the end of the day. So maybe this real revolution isn't a shiny coin. Maybe it's reimagining a world where money works for everyone. Not just the wealthy, not just the tech savvy, or the guy that bought 10,000 Bitcoin back in 2011. On the edge of possibility, the question isn't, can we create a central bank digital currency? It's, can we create a better system with it? Can we improve the lives of lower class citizens with it? And I think that we might just be able to be on the edge of infinite possibilities with a new tool that we are proudly able to call CBDCs. Thank you.